This episode of the podcast is brought to you by Franny's Pharmacy.
Now more than ever, it's important that our society focuses more on our mental and physical health. At Franny's Pharmacy, the team is committed to their community's need of being happy, healthy, and stress-free. Come learn how Franny's Pharmacy can assist you in a clean, professional environment with their expert bud tenders that are excited to educate you about the benefits of their lab-tested, DEA-certified CBD products. Franny's Pharmacy also offers wholesale and franchise opportunities. Visit their website at frannysPharmacy.com, and that's pharmacy with an F, and use the promo code CannaConnect10 for an exclusive Cannabinoid Connect discount. Again, that's Franny's Pharmacy with an F.com and use the promo code CannaConnect10 for an exclusive Cannabinoid Connect discount. Franny's Pharmacy, putting the farm back into pharmacy. Matt Hawkins, welcome back to the podcast. How are you, sir?
Great, Kevin. How are you? Thanks for having me again.
Yeah, of course. I'm doing well. It's a little hot here in Dallas, as I know you can agree, since we're located in the same area. How are you dealing with the Texas heat?
My grandfather once said, if anyone tells you that they get used to the Texas heat in the summers, watch out, they'll lie to you about something else.
I like that.
Good grandfather / dad joke, right?
Right, but there's some wisdom there. I mean, that's
absolutely.
The truth.
I'm ready to get out of Dodge. I try to work remotely in cooler parts of the nation this time of year. I'm about to head out to Utah, and I'm excited about it, just to get the hell away.
I don't blame you. I was just in Breckenridge over the weekend, and just being in that elevation and the cool weather, it was such a nice change. So enjoy your time in Utah when you get out there, for sure.
Thanks.
Well, Matt, you're the perfect guy to talk to today on the podcast. I mean, you being one of the longest standing investors within the cannabis industry, and there's a lot going on within the market right now, right? I mean, we're seeing the highest inflation that we've seen in years. We're seeing the Fed interest rates being raised, right? And we're seeing that cannabis, there's a lack of capital at this point. So from your perspective, Matt, as the founder and managing principal of Entourage Effect Capital, walk us through the current state of cannabis investing in a bear market. What's happening? What are you seeing? And how can people navigate through that?
Well, that's a lot to unpack there. It's not easy. I mean, we're in the middle of our fundraise for our third fund. We're about, it's a $150 million fund. We've raised, 60 some odd million of it. And it's not easy. It's not easy for anybody. It's not easy. I mean, and we've got a track record. But it's not just cannabis. It's the whole, everybody's kind of sitting on their hands right now, just waiting to see what's going to happen. And we've been through these cycles before. It's just the way it is. And, we don't get nervous about it. But what we're actually excited about is that we have a lot of dry powder. And this is an enormous opportunity to be investing capital. Because really, for the first time, and since really we've been investing, is that there's a clear distinction between what money is looking to buy in at versus what operators are willing to take from a valuation standpoint. And it's clearly in the to the benefit of the investor right now. And we're not ones to rake people over the coals or try to take advantage of people, but it does provide the industry a nice reset. But in the same vein, it's tricky because there's not enough of us to go around to support companies that need capital, and we're only really investing in later stage companies now. So there's a huge gap between the companies that we want to invest in, which is companies that we can build scale around in advance of what we think will be some type of legalization events, quasi-legalization sometime in the next 5 to 7 years, which is right in the middle of our hold period of our third fund. So that's great for us. The problem is there's a dearth, even a greater dearth of capital for the early stage companies in the industry that are, in some cases dying on the vine, and it's unfortunate, and I don't like it. But there's not much we can do about it. And we need something to happen legislatively to initiate some kind of a change, and hopefully that can be the Safe Banking Act that we keep hearing. Seems like there's a story every week, if not a couple times a week, on that it looks like it could happen in the next 6 to 9 months. But I guess I'll kind of believe it when I see it.
Right. Yeah, I mean, you make great points, and to the point about just overall this lack of capital that we're seeing, and how some of the startups within the industry are really suffering because of that lack of deployment of capital. Some people are getting creative out there, right? I think I saw you on Benzinga Cannabis's conference, and you talked about how, in some examples, there's like a Denver warehouse centers that are looking to refinance their mortgages out of commercial debt into private debt so that they can lease facilities to legal cannabis growers. I was just in Breckenridge, as I mentioned, and I ate at a place called Breckenridge Distillery, which I learned was owned by Tilray. So it's just interesting, like kind of some of the pivots that we're seeing in the industry with this lack of capital. I mean, you want to expand on that?
Well, I think I was saying that because that's how I got into the industry back in 2014. I mean, that's what real estate owners were looking to do, is they wanted to have private lenders as their mortgage holders so they could then go and lease their facilities to growers and get better rents. I think now there's, real estate lending and real estate capital isn't the problem. There's plenty of that. I mean, we've got REITs, and we've got, real estate lenders that are in the space that have plenty of capital to put to work, but they need deals to get done operationally, so they will then have opportunities to place that capital on the real estate side. For example, our deal with Harborside, that we closed with Harborside when we merged Harborside, Loudpack, Urban Leaf, and Sublime all in one, that gave us a real estate portfolio that was very, very valuable. We were able to leverage that, and we struck a super deal with our our partners at Polaris, and we were able to have a Polaris. We had a great deal with them, and we look to continue to do things with Polaris going forward, and other lenders that but we need to do deals to do that, and you need to build scale in order to have the critical mass of the real estate to unlock value and get access to that cash.
Mm-hmm. Let's go back to EEC's funding journey. I know you mentioned that you're in Fund 3. And you mentioned Harborside just now, which I believe started with Fund 1. Do you want to kind of talk about Fund 1 through 3, the amount in which, you deployed capital, and kind of that evolution and that process within
Sure.
EEC?
So I like to say we've kind of matured with the industry. When we started in 2014, all that was available to us were startups. And so, $300,000, $500,000 could move the needle at these companies, but they were all, angel investments. And Fund 1 was a smaller fund, and so we were able to make 20 investments, and that was a big success for us. I mean, we returned, it will probably end up being a 4x when it's all said and done, and almost 3x of that has already been returned to our investors. So that was real money that we monetized back to our investors. Fund 2 was 60 million, then 17 to 19 vintage. That was, again, we matured with the industry. Went from, we were making more Series A investments, 3 to 5 million over the life of each investment. Some cases there were some revenue, no earnings, but early stage deals, just not startups. Fund 3 is entirely different. Fund 3 is, like I said, targeted 150 million. We've already made 7 investments out of Fund 3, and they're all, for the most part, later stage deal, with a few exceptions on early stage kind of carve outs in the fund. But these are scale building opportunities where we're writing, 2 to 5 to 10 to $20 million checks over the life of the investment, in advance of what we think, like I said, will be some type of legalization event during our hold period.
Mm-hmm. So, just following that, what is EEC's current investment strategy in this bear market? So is it primarily focused on the Fund 3s? And then the second question is how are you identifying leaders within the space and executing these deals?
Well, Fund 2 is still in its harvesting period. I mean, we're fully invested, except for some follow-on capital that's left to be utilized when necessary. And we feel like we've positioned the portfolio to be situated or to where once something happens that's kind of a sea change, we're going to be able to capitalize on that. Whether it's the roll up we did with Harborside, whether it was positioning a few other companies that we had larger stakes in to be kind of our leaders. We feel pretty good about that. Fund 3, though, I mean, we're just taking advantage of what the market's giving us, and that is, companies that are growing but need capital to take that next step to go further, whether to acquire somebody else or, we're looking at verticals. We're just looking at this at every sector in the space, and we're trying to to find the leaders in those categories and give them the firepower they need to scale up. And we want to work with the world-class operators that are in each one of those sectors that we can attach ourselves to. With respect to finding the talent, I mean, my God, I mean, we're seeing some amazing talent that's entering the space. And so the great thing about Fund 3 is that when we're underwriting deals, it's not just people that have been successful in other industries outside of cannabis, but it's both now. I mean, it's like the operators have had track records outside of cannabis and inside of cannabis. And so it's an easier underwrite from that standpoint. And, but it's like it's been in every fund and every, fund that I've ever been involved in, no matter whether it's cannabis or anything else, we're backing management teams, and it start and stops there. I mean, if it's not a good management team, then we're not interested.
Yeah, I want to expand on the talent that you're seeing that's entering the cannabis space. Before we do that, one last question regarding EEC's current strategy. Tell us about your footprint, right, across the country. So certain within your portfolio, so the Northeast, the South, the Midwest, where are you deploying capital, and what are these companies? What do they look like?
So Fund 2 was very California centric, and like I said, I think now we've positioned ourselves nicely as Harborside's the if not the largest single state completely vertically integrated operator, certainly right up there. Almost a $200 million run rate now. That's that will be before we started this process, it was more like a $50 million run rate. So it's a big boy now, and so we're excited about positioning that. California has its issues, but we're the larger companies are the ones that are going to benefit, and that's, I'm not saying that's a great thing. That's just the way it is. Fund 3 has definitely moved east. I mean, we've got investments in single state operator in Missouri, Organic Remedies, which is one of the leaders, and they used our capital along with our partners' capital to continue their dominance in the state and actually moving into some other Midwestern states. We invested in Curio Wellness in Maryland, same type thing. Organic Remedies is obviously medicinal, but there's the upside there when it goes rec. Maryland, Curio Wellness is a similar position where they're going to be dominating not only Maryland, but also moving into the other mid-Atlantic states, some Northeast. And we're looking to continue to grow in the Northeast and in the South, even in the Southeast. There's some great medicinal plays in the Southeast, but we're also looking at other, ancillary plays. I mean, we've made investment in Hound Labs, which is the only breathalyzer that measures THC content in your body at that, particular moment in time. It's an amazing tool for, measuring impairment, and that's going to be important for transportation, not to mention, law enforcement as things go forward. So
yeah, I was gonna say that's like a big lack right now that law enforcement has, is the way to measure, the toxicity levels of cannabis. And that's just something that they can't track right now. Is there anything that they're doing outside of a breathalyzer that you mentioned, or is it just kind of lacking overall?
well, you mean what?
Like what apparatus or tool are law enforcement using now, since
Well,
they don't have?
they're not really. That's the thing. And so this is actually for initially it's commercialized through private industry. And like, for example, think about transportation companies that go from state to state where the laws are different. I mean, their insurance requirements, you know, they need to have ways to measure impairment, and these are things that are coming to the forefront very, very fast. And Hound Labs is out in front of it, and we think it's just a huge play. And there's a huge demand for it right now, because of the fact that it's becoming so real. And it's only going to get more prevalent as law enforcement has to figure out how to measure impairment. And as we get closer to some type of legalization event, that's going to be part of the dialogue.
Right. Yeah. I mean, with 19 states that are currently online, I mean, it's only going to grow from there. And this is going to be an issue that law enforcement will definitely need to tackle. Not to mention, it'll help the industry overall, because there's no way of measuring right now. So there's a lot of anecdotal evidence. And so this could be one thing that can be regulated and enforced. That sounds like a great idea. Matt, going back to your point about talent entering the industry. So tell us what you mean by that. I mean, what are you seeing in terms of the level of understanding and sophistication around business, with new CEOs entering, new senior level management, and how is that shaping the industry overall?
So I'll give you an example. Like, Harborside's new CEO, who came from Urban Leaf, is a guy named Ed Schmaltz, and Ed is a former Goldman guy. He was the COO at Patagonia. He was the CEO at FAO Schwartz. I mean, these are real operators that are now in the industry and he's one of several that have kind of jumped into the mix here. And we're just glad to have him. We're happy that the industry is now attracting this kind of talent.
Mm-hmm. So to wrap up our conversation, Matt, I mean, as the market is cooling down, obviously, with everything going on economically, there's a shift in focus in federal regulatory landscape, right? Different bills and policies that have been proposed. So I want to get your thoughts. I think you did mention earlier in this conversation safe banking, which is definitely needed, and you've seen some movement there. So tell us a little about what you're seeing with safe banking, your predictions with that, and then maybe your thoughts on some of the current bills that have been proposed. We know that we have Schumer's bill that's been proposed, the MORE Act that's been brought to the table, and then most recently, Nancy Mace from South Carolina's States Reform Act, which I recently had her on my podcast to talk about. So, just love to hear your thoughts on everything going on federally.
Sure. I think that let's talk about Safe Banking Act first. I mean, you keep hearing safe banking being, put in and pulled out of different, reconciliation packages, a defense bill, all these things. So I keep saying that it seems to be used as a political pawn. It seems like that's changing a bit. It seems like there's more bipartisan discussion on perhaps there being a mechanism by which the Republicans will bend a little, and then the Democrats will bend a little by not demanding as much social equity components to it, or or a lot of the decriminalization or relief for incarcerated folks from the industry from years back. All of that's very, very important. I've been saying now for over a year that those things need to be separated and treated individually, because you're talking about something that's commercially needed, which is the Safe Banking Act, but then you're talking about other things that need to be rectified going forward as well, that are social issues. They're not economic issues. There's some economic attachment to it, but it doesn't impact the industry economically the way the Safe Banking Act will almost immediately. And so it seems like there's some movement that direction. The bills, similar type thing. I mean, there has to be some middle ground on what's in and what's out of some of these packages. I think we all know the Schumer bill is probably DOA. Well, the truth is all these are, but it's more about getting to a point to where there's more discussion. I mean,
even the state, sorry to pause, but even the state's Reform Act, you feel like that's DOA? I mean, obviously there's been no movement on it, but
no. I mean, no. I don't think that's DOA, but I just think the ones that are out there. I mean, even Nancy Mace's, and by the way, we hosted a fundraiser for. I mean, we think, setting politics aside or where your party affiliations lie or all that, but the fact that a Republican has come out and put something forth like this is a tremendous thing for the industry, regardless of what side of the aisle you're on. Right. And so, and for us as business people, we found hers to be quite attractive because it really is just the States Act. I mean, it's basically just saying, leave it to the states and remove the federal illegality. And then let's go from there. I mean, that's commonsensical. Right. A lot of these things that are out there aren't commonsensical. And the interesting thing, and I think everybody in the history has heard this, but Bill Maher was joking about it, saying that if Democrats aren't careful, the Republicans are going to steal this issue from them. That's right. And they'd be smart to do so. But being smart and having common sense in politics are two foreign things.
They're far removed from each other. That is for sure. Yeah, but you're absolutely right. And I mean, what would you say with quoting Bill Maher? I mean, and I mentioned that to Representative Nancy Mace. That is, we know this is a bipartisan issue. We know that there is tremendous public support for the plan. And if one political party could just get their shit together and, double down on this, I think that there could be some real movement and positive change. But like you said, common sense and politics are far and in between.
Well, and but then it's amazing. And then you look at the state level, you look at what came out yesterday or today about how all this talk about the Californians, and Sacramento's getting, oh yeah, we're listening. You're right. The whole thing's backwards. We got to reduce taxes. We reduce the burden on the legalized portion of the industry, so we can convert a larger swath of the illicit market to get increased revenue. Well, shit, if there wasn't one bit of tax reform at all in this budget. I mean, what the hell?
Right.
It's just like it's. Are you effing kidding me? I mean, it's just ridiculous, and it's. We sit there as an industry, like they go, oh, great, they're going to do it. Well, they just been playing us like a fiddle.
Right.
So I hope, that whatever we saw was in draft form or whatever, but it sure doesn't sound like it.
What visibility do you have on the MSOs that have built that coalition to basically take on the federal government and sue them? Yeah. Do you know much about that?
I don't know a lot about it. We've actually just recently decided that we're going to be a little more vocal as a firm on, getting involved in the political side of this. It doesn't do us any favors and the industry any favors for us to kind of sit back and just wait and see what's happening. But I mean, I think you can probably just listen to what I've been talking about or whatever. I'm just a little more vocal than I have been in the past. And it's just time. And it's because we're tired of the bullshit, and we actually have a fiduciary responsibility to see if we can effectuate change. And I don't know if we'll help, but we're going to try.
Mm-hmm. No, very well said. Definitely strength in numbers. Matt, speaking of, strength in numbers and voices, where can people find y'all's website, social media, if they want to follow you and just learn more about the industry, but also, the advocacy side of you guys trying to push federal reform over the line here?
Yeah, I mean, I think, eecpartners.com is our website. You can find me at LinkedIn. I'm not really good at the handles and things like that, but I mean, Entourage Effect Capital has a social presence both on Twitter and on LinkedIn. I mean, typically my LinkedIn is our social group does a good job of on my personal side and on the company side of posting things like this, and also just posting quick snippets or where our heads are and things like that. So we're like I said, we're going to try to get more involved. We're going to try to speak more about things like this rather than just talk about where the industry sits, because these are important issues as we go forward.
Absolutely. And I'll be sure to put those links in the YouTube description box so people can find them easily, so you don't have to recite the ads.
Yeah,
I understand
my
they
age.
can, no, they can get confusing because they're all different also. So no worries, Matt. Pleasure having you on again, man. Thank you so much for sharing your insights. And as things evolve and continue, let's have you on again.
Love to do it. Thanks, Kevin.
Absolutely. Thank you again. And thank you all for listening. Bye.